Hi and welcome to the weekly market update. It is Tuesday the 13th of August 2013. Okay, so it's been quite a quiet session at the start of the week. I think we're really sort of feeling there's holidays at the moment. Yesterday in terms of data, very quiet, apart from we had Japan overnight with their GDP reading. This actually came out better than expected, coming in at 0.9 versus 0.6, so some good news from Japan there. In terms of data that we've seen today, again from Japan overnight, we saw the statement following their last monetary policy meeting. This really confirmed what we saw last week, but that they still feel that they're on track for their 2% inflation target within the next couple of years, and also that they're seeing a moderate recovery within the economy in Japan. Otherwise, from Europe today, we've had German CPI data. This all pretty much coming in line with expectations. But the big talking point probably this morning from Germany was the ZEW survey, which is the sentiment from Germany. The numbers came in much stronger than expected. We had 18.3 for the current assessment versus an expected 12. And then for expectations, we saw a number of 42 versus 39.9 expected. So seeing some really positive data out of Germany there this morning, and we've seen this weighing quite heavily, particularly in the fixed income markets. We've seen that weighing strong on there throughout the day. Otherwise from Europe we saw industrial production data, and this coming in just slightly weaker than expected. Otherwise from the UK we've seen CPI, PPI and RPI data, so the inflation picture for the UK all coming in pretty much in line with expectations. Saw CPI year on year coming in at 2.8 from the prior 2.9, so just ticking down slightly there, which is probably quite a good sign for the UK. In terms of the US data that we've seen this afternoon, we saw an import price index, and then we've seen retail sales, again data coming in pretty much in line with expectations there. So where that leaves us trading today, we've got the FTSE around the 66.03 mark, we've got the Dow around 15,419. In terms of currencies, we've got euro dollar around 1 spot 32.59 and the cable around 1 spot 54.44. For commodities, we've got the gold future trading around 13.32 and then the Brent future at 108.50, and that's the October Brent future. Okay, so in terms of data for the rest of the week, again, still quite light in terms of data from what we've seen in the past couple of weeks, but tomorrow starts off with German GDP reading. This was leaked over the weekend, leaked as a reading as 0.75 when the market's expectation was 0.6. We did see that the effect of that coming into play on Monday in the market. So whether we do see just a confirmation of this number on Wednesday morning of 0.75 for the German GDP reading, we'll also get a reading for the Eurozone as a whole, expecting that to come creep into positive territory, expecting to see that continuing recovery across Europe and hopefully the GDP coming positive. Otherwise from Europe we've got some French CPI data, and then from the UK I think the big bit of data is going to be the release of the Bank of England minutes following the last meeting. Obviously we saw Carney outlining his forward guidance at the last meeting, so people are really closely going to be watching these minutes, particularly for the votes of the members on the forward guidance, on the quantitative easing and on the rate decision. We had seen a split in the past of the QE decision, but at the last meeting we did see 9-0 or 9-0 for the rates and asset purchases in the last meeting, so people watching for that asset purchase vote, but also really the forward guidance vote, and any other statements that sound bites that we might get from the members around their views on this forward guidance, how long they see it going on for, and whether we might trigger some of these knockouts before we get to that 7% unemployment threshold. Otherwise, tomorrow afternoon from the US we've got PPI data and then mortgage applications. Then into Thursday, we've got UK retail sales, expecting those to come in just a slight improvement there. No real data from Europe on Thursday, and then so it takes us to the US in the afternoon. We've got those initial jobless and continuing claims as we do every week. We've got Empire Manufacturing, expecting that to tick up slightly. Got inflation data in terms of CPI for the US as well. We've got tick flows, and then we've got industrial production for the US as well, expecting that as at 0.3%, pretty much in line and the same as the last, as well as capacity utilisation. And then lastly we got the Philadelphia Fed from the US on Thursday afternoon, expecting that to tick up. Well, we're expecting a reading of 15, from versus the 19.8 that we saw last, so maybe a slight fall there. And finally into Friday, from Europe in the morning we've got European current account data, also the CPI, so following the theme of the week, we've got that inflation data, so CPI for Europe as a whole, expecting that to fall just slightly month over month, but otherwise holding pretty much in line. We've also got European trade balance and then no UK data, but from the US we've got housing starts and building permits, expecting both of those to slightly improve, so a good picture in terms of housing for the US hopefully. And then we've got the University of Michigan confidence, that sentiment survey, expecting a very slight improvement to 85.2 from the 85.1 that we saw last. So that's really it for this week. Probably the main focus is going to be tomorrow on those Bank of England minutes, the release of those alongside the unemployment data that we're also going to see with those minutes. Obviously Carney's put that threshold at 7% for when, it's a threshold of 7% unemployment, which they're not expecting to reach for another 3 years, but we will see the unemployment rate released tomorrow alongside the average earnings data, so people will be closely watching that tomorrow. Okay, that's it for this week. Any feedback, much appreciated. Thanks.